Everybody, thank you so much for coming out to Startups Uncensored number 31. I'm Jason Azar. I will be your host tonight, and I'm also the co-founder and CEO of DocStock. Show of hands, like we do every time. How many of you, is this your first Startups Uncensored event? I love it. I love it. You're virgins. Welcome. We're going to pop your Startups Uncensored cherry tonight. How many of you have been to a Startups Uncensored event? How many of you have been to more than 5 Startups Uncensored events? How many of you have been to 100 Startups Uncensored events? We haven't had that many. Don't lie now. Don't lie. Don't start off a relationship that way. Well, welcome. The purpose of our event tonight, which we run every single month, is to bring together the LA tech and entrepreneurial community and get a chance to meet a really great speaker, entrepreneur, investor in the field, and certainly David is the top of that list for me. And then for you all to get a chance to meet each other and hang out, and really for us all just to help each other. I started DocStock 6 years ago now with my co-founder, Alon Schwartz. We've got 40 people that work for us just a couple blocks away, and what we do is we help grow small businesses. And we reach 20 million people a month. We're one of the most trafficked websites on all the internet, and we have the widest collection of documents and videos and business courses to help you start and grow a business. And we have been doing this event now for 3 years, really not to make any money from it, which the free tickets and $10 tickets won't get us there, but really just to give back to the LA community and to help all of you start and grow your businesses more successfully, and to help you meet other really key important folks in the tech space. Please join me in welcoming our guest tonight, David Hornik of August Capital. Thanks, brother.
So what do I get because I have @DocStock tattooed on my butt? What? Lifetime supply of DocStock?
Supply
So if you need that,
of documents.
now you know the path.
Yes, if you too would like a free lifetime membership to DocStock, just take a needle to any part of your body and tattoo on DocStock.
Any part.
Any part.
That's very forgiving of you.
Any appendage. All right, so here's the way the event's going to go, Dave. We're going to...
By the way, Kara Swisher is maybe the only person who's not taller than I am. She's not, in fact, bigger. She's slightly smaller. I'm just saying.
We're going to have an Oompa Loompa for the January event, but it's a very famous Oompa Loompa. So what we're going to do tonight is it's just a general fireside chat. Nothing was prepared. David didn't know any questions. In fact,
that will become obvious.
I didn't know any questions that I was going to ask before this evening. But our goal here tonight, just by let's survey the audience. How many of you right now or in the next 6 months have your own business or plan to start a business? All right, so we got about a solid half of the audience. How many of you right now or in the next 6 months are in the process of raising capital or will be raising capital? All right, so this is your core demo right here. We got the next August Capital deal waiting somewhere here in the audience.
All right.
We're going to talk a little bit about you and your background. We'll talk about what's going on in the world of venture right now, interesting trends, and then we'll talk about some specific advice that will be helpful to the folks in this audience to help them, raise capital, build their businesses, and then we'll end with a little bit of Q&A. And David was very kind enough to fly in from San Francisco, and he's got a flight that he's got to catch right afterwards. So please just do me a favor. I know you're all going to want to bum rush him, talk to him, but I'm sure you got his Twitter. We'll be able to talk, David.
Hornick @augustcap.com.
You got it right there.
Hornick @augustcap.com. So,
and that's your email?
I apologize. I have to hop on a red eye to Boston. I would much rather stay and chat with everybody than do that.
Okay. All right, so let's jump on in. One of the things that I've always thought was kind of interesting is you came from being an attorney into venture capital and actually started off as a litigator. I don't really know many folks that followed that path. Can you talk a little bit about that? Where did you start your professional career, and then how did you end up transitioning into venture capital?
Sure. So I teach a lot, and I'm always asked, well, what's the path to venture capital? And so here it is. This is the perfect path. I studied computer music as an undergrad. That actually qualifies you to do nothing. I then went and got a master's degree in criminology. That qualifies you to do nothing, or at least nothing you want to do. I then went to law school where I thought I was going to be a public defender, and then I was one very briefly, and I determined that actually that was not it either. And then I started, I moved to New York. I clerked for a judge.
Where'd you grow up? Where were you from?
grew up outside of Boston, moved up to New Hampshire. My dad was an early computer scientist at Digital Equipment Corporation. So on the good side, we did always have this computer in our basement, right? This was in the days when you literally had to stick your phone into this thing called an acoustic coupler, and it literally squawked the bits at you, beep boop, beep boop. You'd watch it, which was amazing because my brother and I, in elementary school and middle school, were like chatting with these college students who didn't know that we shouldn't be chatting with them. That was good preparation to be a litigator in New York. I learned all the vocabulary I needed by chatting with the college students online.
What's computer music, by the way? Is that like synthesizer? It was like pre-'80s and you wanted to be ahead of the curve? Exactly.
No, it was literally the 80s. So anyone who's listened to any 80s music, you have heard the DX7 synthesizer, this synthesizer that literally changed the sound of pop music forever. Some would say for the better, others might say for the worse. And it was invented by this guy, John Chowning, who was a professor at Stanford, who was literally the guy who built the computer music lab. It was called CARMA, the Center for Computer Research in Music and Acoustics. And actually, when I got up there, hey, hi, I'm a freshman, I'm excited to take classes. They're like, we don't teach classes to you. What? Yeah, that's crazy. They said, you think undergrads would want to take classes up here? I'm like, what? I came here for that. All right, fine. So I took classes in acoustics and psychophysics and all sorts of really interesting things. In fact, Tim Westergren, who founded Pandora, was in one of those computer music classes with me. He and I wrote a piece of music together, although in all fairness, Tim wrote it because Tim was a way better musician than I was. But I was along for the ride, which was great.
Cool. All right, so you have this really interesting educational background. You're a public defender, and then at some point you moved over to transactional law, right? Working on more deal stuff?
Yeah, so I was in New York. I was a litigator. I was, in fact, my very first client was Ticketmaster when it was having its big fight with Pearl Jam and the antitrust division. And I had this incredible moment where I was in Washington, D.C. We were preparing the CEO of Ticketmaster to testify before Congress, and at the same hotel were the guys from REM and Aerosmith, et cetera. And we're there in our dark suits, and they're not in their dark suits. And I remember my wife sat down next to me, and she's like, that's the guy from Pearl Jam, and that's whatever. I was like, yeah. And she's like, why are you here? Like, what has gone wrong, So that was a sort of interesting wake-up call, like, I am the evil empire. And in the meantime, Jerry Yang and a bunch of the early Yahoo guys were all dorm mates of mine from Stanford, and they had started Yahoo, and the internet thing was starting to happen, and it was amazing.
Did they try to recruit you to start Yahoo with them or come in early?
Stupidly, no. I mean, for me, not for them. Another buddy of ours was actually in B school while I was in law school, and they called him up and said, it was Jerry and Dave, and they said, hey, Tim, we're working on this company. You want to help us write the business plan? And Tim said, all right, sure. And that was a great move, great call. I came out to Silicon Valley to represent Yahoo. I wasn't.
But if you need a jingle, I'm your guy.
I can nail it. Right, exactly.
I got that down.
I can write your privacy policy and to music. If you're a minor, do not use this service. That kind of thing. So anyway.
I like how you really committed to that.
I did. You got to own it. This is LA. I got to own it. I can't. Up in Silicon Valley, I might not have sung that. I might have just whispered it. So I came up, I started. So instead of joining them, which would have made a ton of sense, I joined their law firm, which was called Venture Law Group, which was doing amazing startup law, and I started only representing these little startups. And at the time, I thought, oh, this is great. New York was a lot of work. It was like a ton of work, and I thought, okay, I'm going to move to Silicon Valley, and I'm going to get an in-house job or something, and I'm going to take it easy because that had been so much work, and I have these little kids or whatever. Mm-hmm. And then I started representing my very first startup, and it was a little bit like, heroin or something. It was like, holy crap, this is like the greatest thing I've ever seen in my life. Now I can't sleep.
And what was it about that was the greatest thing? I mean, what was so exciting for you?
Well, startups are amazing, right? They shouldn't work. Like, I apologize to all of you who are busy trying to start them, but the fact that any startup ever works is miraculous. It's like, there are these little companies and it's an idea and they have no money and you got to convince people to do things they totally shouldn't do, and and yet people do it over and over again, say like, oh, I've got this great idea, I have to start this company. And so just that is really addictive. But then when it works, when you raise money and you start getting customers and you make something that actually changes how people do business and all that stuff, that's amazing. Like, I truly find that just the most completely intoxicating thing ever. And so as an attorney, I was sort of pretend that I'm on your team. I'd be like, I'm with you guys. And they'd be like, yeah, right, lawyer boy. And I'd be like, no, I'm totally, like, where's the t-shirt? They're like, t-shirt? You don't wear our t-shirts. But I thought, like, I'm with you. I get to help you build this company. Yeah. And that was completely amazing to me. So I literally stopped sleeping. I mean, I was just working all day and night. And my view was, and this was in the late 90s when things were moving so quickly that if you got something the next day, it gave you a competitive advantage as opposed to waiting a week and a half. I mean, it literally felt like that. And so, if I had to stay up all night to get you your contract or to help you move the M&A done.
So were you building your own book of business? Like, you were going out and finding these companies and building your own product?
Eventually. I mean, when I started at Venture Law Group, I didn't know anything. I literally when I joined them, I said, like, I don't know anything about your business, but I'll figure it out. And they're like, all right, go for it. But it was so fast and furious that you had to learn quickly and you got involved very quickly. And so I was at all sorts of companies' board meetings and all sorts of companies, and we were doing financings. I mean, I think I did the last year of my practice of law, I think we did $1 billion in private financings. I mean, they were just constant. And then I had lots of clients who I ended up...
That was last year pre-bubble, right?
That's 1999 to 2000.
Yeah.
And I joined August in June of 2000.
Got it.
And so anyway, what happened was I was representing this company, Evite, and it was this really great, fun company, and I got to know the team very well. And 2 of the 4 partners at August Capital at the time financed the company, were on the board, and I was at these board meetings, and I was doing exactly what I should not have been doing, which was pretending like they cared what I had to say. So we'd talk about the business, and I'd say, you know what you should do, and they go, where do you get a t-shirt? Like, what's... But in Evite, I really knew their business well because I was doing all of their licensing work, I'd done all their financing work, I'd done all of their employment work. I was just spending a lot of time with the team, and so I knew the business well. And so when we talked about the business, even though it really was not in any way my job to say, have you talked to so-and-so because I think that'd be interesting, or I don't think you're ever going to hit that number because it's only changed check-wise, things that are not the job of the attorney, they'd say, oh, that's a good point, like what David said, And mind you, in another instance, I did the exact same thing, and I was instantly fired. Literally, I went to this board meeting, and I had the audacity to contradict the venture capitalist. Said, no, I don't think that's right. I think you should do blah, blah, blah. And between that board meeting and the next board meeting, I got a call from my client who said, yeah, we really love you, and we'd love to have you still be our attorney, but you aren't. I was like, bummer. Guess I'll find someone who's not a jerk.
Which venture capital firm was that?
I've been so good about not saying.
But we're in LA. No one even knows. It's not the Bay.
It's the jerky ones. Trust me.
All right. But needless to say, if somebody here is telling you that they want to raise money from that firm, you might say, oh, be careful.
Yeah, I don't know. Like, I wouldn't want to be their attorney.
All right, got it.
Maybe they're great to raise money from.
All right.
So anyway, it was after the board meetings, I would chat with these partners from August Capital, and so there was this guy named Dave Marquardt. Has anyone out here heard of Dave Marquardt? I have a few. So Dave Marquardt was the earliest investor in Microsoft, Sun, Compaq, Symantec, Seagate, Xilinx. The guy he's been on the Microsoft board now for more than 30 years. Truly stunning, brilliant, like one of the great titans of the venture business. And luckily, he was on that Evite board, and we would chat after the meetings. He'd say, oh, what did you think about that? And we would just, it was just like casual conversation. And actually, at one point, I went out to lunch with him, and we were chatting.
Was he a partner at August?
Yeah, he was the founding partner of August Capital. So Dave, we have lunch and whatever, and we finished lunch, and he says, oh, David, it's so great to get to know you better. It's good to know a great attorney or whatever. And I thought, oh, like attorney, that's not. Weren't you like wooing me? Wasn't this a date? Like, because I'm totally in love. And you've just told me, well, I'd like to meet your brother or whatever, So, it was, so sometime later we still were chatting after these board meetings, and finally I was chatting and Dave said to me, so have you ever thought about the venture business? And I said, oh, that sounds interesting. Tell me more. I was sort of like, well, you might be good at this. Why don't we talk to you?
Let me pull out my venture business scrapbook of all the ideas I've ever had on how to make venture better. Now that you mentioned it.
Look at my, August Capital socks that I have knitted. So anyway, so I said, yeah, I absolutely think it's an interesting business. I'd be thrilled to talk with you about it. And so then I went in and I met there were 4 partners, and I met them, and I started going to meetings. I went to partner meetings. I'd have lunch with them. I had breakfast with them. It went on for 4 months. And finally I said after 4 months, like, what? They called 15 people that I references. I said, are you people going to hire me? What is your plan? Like, do you have a plan here? Is this Jack David around day? Like, and they said, all right, fine. You can join us. But you're probably going to suck at this. And I said, sweet. Because to me it was like, that's totally fine. In fact, along the way, I was talking to one of the partners, and he said, David, the venture business is a very solitary business. The venture business, you're really, while we're a partnership and we help each other and all that, in the end, you make choices and you make decisions, and you live and die by your own choices. And so, how do you feel about that? And I said to him, like, I'd rather live and die by my choices than anyone else's. And he looked at me and was like, perfect for venture. You're as arrogant as the rest of us. Like, done. You're in. So that was one of those moments where I thought, like, I've crossed the line. There was another point while I was talking with these guys where I was talking about a company I represented that I loved that was kind of doing anonymity on the web. And this partner was saying to me, I actually looked at that company. I think it's immoral. Like, I think that company is evil or whatever. I said, oh, no, it's not evil. But, yeah, it could enable some, troubling things. But think of all the things. So we had this conversation. And then as we get to the end of the conversation, he said, so, David, what if you were to list kind of 3 companies that you think are interesting that you'd like to fund, what would they be? And I don't remember what the other 2 were, but I listed this immoral company. Like, oh, well, I'd invented these guys, And he looked at me like, really? Like, I just told you they're immoral. I said, look, it's huge. Imagine anonymous commerce, and you could do this, and you could do that. And I went home and I said to my wife, like, it was super fun thinking of being a VC. I just blew that, but it would have been fun. And it turns out they asked me to join them.
Great. All right, and so you've now you're a partner there.
I am. I guess I didn't get shot yet.
What are some of the deals? What are some of the companies that the folks who here know that you're in?
So I've invested, kind of broadly across consumer and web and internet, enterprise, whatever. I'm on the board of StumbleUpon, which is probably the kind of most likely known company.
And did you come into this last round, or were you in it the very first time also?
No, in this last round. So I was spending a bunch of time with the company, loved the founders, loved the company, and as I was talking with them about, hey, please take my money, they got the offer from eBay and sold the company.
Got it.
When they decided, hey, we're going to spin the company out, they said, hey, David, do you want to hear the latest? And I was like, yeah, of course. I wanted to do it then. I want to do it now. And so we spun it out of eBay, and that's been great. Here in LA, I don't know if you guys know Gravity, and the Gravity team came out of MySpace. Just some of the smartest business and technology people out there. So I funded those guys. Couldn't be happier with that. Mm-hmm. So I'm in Santa Monica a bunch. On the enterprise side, I mean, right now, the kind of shining poster child is a company called Splunk. How many people have heard of Splunk? I mean, Splunk is an enterprise business. It's basically a search engine for your data center. It takes all of your machine data, it allows you to search across it, and then get what we call operational intelligence, understand how your business is working. And you asked me, like, why was I intoxicated by the startup world? Well, this is such the classic example. I met these 3 founders. They were working on an idea that was an interesting idea. I wasn't yet ready to fund it. I had a lot of conversations with them. I gave them some feedback. We went back and forth, and then one day they called me and said, hey, David, we figured it out. Can we get together? I said, that sounds great. And we get together, and they say, look, you have all this machine data. It's really hard to debug systems. Imagine if you had a search engine that sat on top of it. And you could, and here's like a mock-up, and here's what it would look like. I said, that would be amazing. Like, I get it. That would be amazing. Sounds great. I ultimately gave them a term sheet and funded these three guys with a friend of mine, Nick Steriali. The two of us funded the company, and they set to work building it. And it was like, okay, can you build it? And they said, oh, yeah, we totally can build it. Turns out things are hard. So they got to work building it. Took them a couple of years to get the thing out there. But once it got out there, it really changed the way people would look at this machine data, which at the time nobody was really worried about. Nobody was thinking about it. And suddenly it became this platform for doing things like system debugging and system management and security and compliance, all of these things. And this company that was 3 people became 100 people, became 300 people. And in April, the company went public. It's now trading at a little over $3 billion. And it's just sort of astonishing to think, the money is one thing, that's amazing. It's amazing to think that you could take a company that you fund at single-digit millions and it's worth billions. That's crazy.
It went public for billions.
Yeah, it's in public. Yeah, it went public at $1.5 billion. It traded up that day past $3 billion.
Wow.
Yeah, so it's actually been the best IPO since LinkedIn, and continues to trade there. So that's amazing.
So how many boards are you on right now?
I'm probably on. I should probably know. Let's say 8.
And how in the last 12 years, how many deals have you done? How many deals have you led?
20, maybe 20 in 12 years, maybe. I mean, we do about a deal or two a year.
Each partner.
Each partner. So I bet you I've done 20 or 25 deals.
How many of those deals, besides the company you just mentioned, have had an exit?
So I used to say this, like up until.
And that one deal, I mean, even if all your other companies didn't work out, it sounds like that deal, performance-wise, would make up for all of them.
It's an awesome deal. It's a good. If I could do another one of those this decade, that'd be great. If anyone has that, Hornik at augustcap.com. You can put in the subject matter, I have that. And that would be good. Just so I know. But don't all of you do that. Just if you have it. If you have it, do that. If you don't fuck with me. We can't have that. So in the first decade, my first decade in the venture business, I had 3 companies that we sold that I was kind of made. When I say August made, I don't know, let's say $70 million. And I had 3 companies that went out of business that lost 25 or 30, or again, a number I should probably know. But, so I was plus $40 million or something. Mm-hmm. So you say, well, that's better than negative, but that's a decade. Like, over 10 years, you should be doing better. And I funded Splunk in 2004. So it took 8 years before it got public, and it's, and we'll make $500 million or something, right? So that makes up the difference. I had a buddy from high school who said to me when I was chatting about it, he said, oh, that's awesome. So what do you have to do that like every other year? I said, no, like that'd be amazing, but no.
Can you talk for a moment? I think a lot of folks here, are familiar with it, but a lot may not be. This idea of a portfolio theory with venture capital. I think it's confusing to a lot of folks, like, why is a venture capitalist maybe just going for 1 or 2 wins out of 10 overall investments? Can you just explain that concept of portfolio theory and how, as a venture firm, you maximize returns for your investors?
Yeah, I guess it depends on it depends on the firm, how they look at that. I understand, I certainly could describe for you portfolio theory, but I wouldn't say that it affects how we behave. When we invest, so the theory is that the one outlier will deliver all of the returns, and therefore you should take outsized risk to deliver one gigantic outcome, even if the others are all zero. And while that is true in theory, the problem with it, as with a lot of these theories, is that if I were to determine that that's the case, it wouldn't increase the likelihood that I got that one. It's not like I look at it and you go, okay, I got these 10. That one's crazy, let's do that. We'll go all in for that one. You guys fail, right? It's more like, all of you are going to be huge and awesome, except you. Maybe not you. But you two are promising. I have 4 children. I look at them this way, actually. You're doing well. You not so much. But it's early. You're in 5th grade. Shit may work itself out. But right now, odds are on the girl. That's all I'm saying. So, and yet I treat them all the same way I do with my startups, which is I believe they all have the capacity to pay for my retirement, right? So I will not undermine any given company and or child. I will promote them all. And I went into it, all of my startups and all of my children, with the same kind of optimistic hopefulness that I believe like each one had the capacity for greatness. Now, sometimes you're disappointed over time, but you
have this philosophy.
that I believe that they have the capacity for greatness. They know.
All right.
They know. I don't have to name names, do I?
We'll come back to. Let me ask this question, and we'll dive into it more later on. What are the qualities that you look for in entrepreneurs, and what are the success metrics that you want to see in the business before you make an investment? I'm assuming that your typical Series A is somewhere between $4 and these days $4 and $6 million.
Yeah, it could be. I mean, look, there really isn't a typical, right? There shouldn't be a typical. There is. It sort of happens, but it shouldn't be, because the reality is that when you come in raising money from me and you get to that slide that says, and I'm raising $6 million or I'm raising $4 million, I will always ask the same question. Everybody may not ask this, but I will ask this. And the question is, and why are you raising that much money? Why that much money? And so there are answers clump in a set of answers that are varying degrees of bad or good, depending. The worst is because. That's a terrible answer. Because, or, well, because the valuation, I want a high valuation, and so I need to raise extra money or whatever. Those are bad answers. The good answer is, the second best answer is, with this much money, we can extend our runway for a year and a half, and I think that's the right amount of time to fund. That's almost getting to the answer. Like, okay, you're onto something. Keep it coming. What is it? What are you really looking for? The right answer is, this is what my business needs to get to the next level, right? Maybe that next level is I'm going to be profitable, and that would be fabulous. It's almost never the case, at least in early stage companies. But
stock.
That's why I tattooed it on my butt. You wouldn't let me in, so I needed a free year of the service. So that is amazing, by the way. Congratulations. That is incredibly rare, and it's incredibly great. I'm going to divert for a second. Let me talk to you for a second. We'll get back to this financing question, but
you're making me slightly uncomfortable. I'm just saying, this doesn't happen often.
It should make you uncomfortable. So there are 2 reasons to raise money, right? One is you need to raise money, right? And that is, I'm out of money and therefore I will die. Yeah. That's arguably the best reason. Like, oh no, we're dead, so raise money. The other reason to raise money, and in many ways far more interesting to me, the one that is far more compelling, is you come to me and you say, David, I have a cash flow positive business. It is a great business, and I understand the metrics, and it produces X amount of cash, which I plug back into the company, and it grows at XYZ rate, and that's great. But if I had $10 million and I applied it to customer acquisition, or I applied it to product and product retention, or I applied it to whatever, I could accelerate the growth of my business by X amount. And that's what I want to do. And so that's why, David, I need $10 million. That's the use of the $10 million. It's not because I'm going out of business or because it's because money is a tool, right? In all company building, money is a tool. There was a period of time when when debt was this incredibly dirty word, like, oh, no one would take on debt, and you should never take on debt, and teach your children you should never take on debt, and that is moronic. you shouldn't take on debt stupidly, but debt, like equity, is an incredible tool. If you could figure out how to increase the value of your company by 200% by borrowing $2 million and produce enough capital to pay for that debt, that's awesome. It's non-dilutive. It costs you a little bit of money or whatever. If you can't, but with 10 million in equity, you could increase the value of your company 100%, and you're going to sell me 20% of your company. That's a great deal. So how's that company doing? Like, couldn't you accelerate it more? Don't you think? Like, I'm just saying. I mean, it's great that you're cash flow positive, but you could go faster.
I appreciate it. Let's see what happens by the end of the event tonight. Maybe we'll have a signed term sheet. We'll see.
I'm just saying. Okay, back to the pitch. So if you're pitching me, but no, really, if you're pitching me, and you say, and the amount of money isn't going to get you to cash flow positive, then what's it going to get you to? Well, what it has to get you to is some inflection in your business. It has to get you to that point where your business is meaningfully more valuable than when you went to raise money the last time. And maybe that's that you're going to actually launch a product, or maybe that means that you're going to acquire 100,000 customers, or whatever. But raising money should be with a purpose, and that purpose should have to do with your business. So when you say to me, I'm raising $4 million, and I say, great, what's it for? You should say, you know what, and we're going to use that money to launch the product and get the first 1,000 paying customers, at which point I think it will be in a great position to go raise more money at a better valuation.
What are the qualities? If you had to say, here are the top 5 most important qualities I want to see in an entrepreneur when they come to pitch me, when I spend time with them, what are those?
Well, this one's going to feel is a little misleading, because there's so many versions of it. But entrepreneurs need to be amazing salespeople. It is it's great to be a good technologist. It's great to be a really smart finance person or whatever.
And what makes somebody an amazing salesperson?
Well,
for you?
That's the thing. I think that's an interesting question, right? Because I've seen very quiet, understated, people who can convince you to buy their products or invest in their company without being completely hypomanic like myself. Like, you could just describe it, it's a great product, and it's, because now when I'm talking this way, you guys are listening quite attentively to what I'm saying. So I could sell you anything right now, perhaps some growth capital. So I don't know I'll tell you what the answer is for sure. Like, great entrepreneurs are the leading experts, at whatever it is they're doing.
Whatever they
right?
do.
And that has to be the case, right? No one should know more about your business than you. And if all's going well, no one should know more about your market than you, right? So when I'm talking with entrepreneurs and I ask them a question about their business, there can only be 2 answers. One is, here's the answer, it's blah, and it's because I know the answer because this is what I do, or I don't know the answer to that, but here's what I think based on everything I know, right? It can't be the case that you know the answer to everything, but of those things that you don't know the answer, you better have an informed opinion. Like, that's your job, is to have an informed opinion on the things you don't know. If you're doing a startup, you probably don't know a bunch of things, but if you don't have some theory about which way it's going to go, then how are you going to make choices? So great salespeople are absolutely complete masters of their domain, whatever that is, and then they're very good at being responsive, right? And not about, it's not Jedi mind tricks. It's not like, oh, don't look over here because I'm selling you this. It's, I'm selling you this. You want this. That's incredibly effective. So I think you have to be great salespeople.
What else?
You have to be really good judges of people. You have to be judges of...
The entrepreneur needs to be a good judge.
Yeah, you have to be a good judge of talent, right? Because your company is entirely about the people you bring into it. And so part of that is the sales part, again, convincing people to join your company, even though that's crazy. And then part of it is making sure that you're asking the right people to join you, right? I say that the venture capital business is at least in significant part about being a good judge of character of people, and then about psychology. Like, can't tell you how often you end up in these conversations with teams of people, and it's like, this is going well, why do you hate each other? Like, stop hating each other, hate the enemy, not,
What else? All right, so great salespeople, great judges of character. What's the third one?
That's it.
Those two.
I mean, look.
No, I think that's fair. No,
I mean,
those
I
are
think
the top of the list.
those are the way. Everything else is like teeny minuscule compared to those two.
So one more question about the pitch, and then I'm kind of interested to get your thoughts on general trends. We'll come back. What are the big mistakes that people make when they come to pitch you? Because here's what's going to happen. Some of the folks here after the event are going to, come chat with you, and they're going to email you, and you can say, great, send me your pitch deck, let's talk, and then you'll do a phone call, you'll do a coffee meeting. Maybe if you like them enough, you'll bring them in for an all partners meeting. What are the mistakes that they're going to make that, if not for those mistakes, maybe they would have gotten farther along in the process with you and another venture capitalist?
One of the big ones is that it is never a good idea to tell me anything. You need to show me everything, right? I mean, the classic example of this is the page describing the team, right? And so there are two versions of that page, and one of those versions is world's leading expert in SEO. Who says? Like when you put up that slide and unless it's in the law, what's the word for when it's just a fact? Remember, there's
ipso facto.
There's something where you can just declare it as a fact, like the weather was raining on this day. Fine. If it's unequivocal, like he's the world's leading expert or she's the world's leading expert, fine. In every other instance, what did that person do to qualify that leads you to believe that they're the leading expert in SEO? Maybe they managed the platform for SEO for Yelp. You know what? Whoever did that job, really good at it. Like that person, I'm willing to give it. But I want you to describe what you did. I don't want you to tell me who you are, right? I want you to tell me how your business is meaningfully differentiated. I don't want you to tell me that it is differentiated, right?
So show you, and the same probably goes for the product, but I don't tell you why it's a great product, just show you the product.
If you have a product, the very best thing you can do is get on with it. Show the product. Like, it speaks for itself. People, VCs by and large are not, there's this image of like VCs as finance people, and basically that's not true. Basically VCs are product people. They really want to like dig in and go, oh, I'm excited about that. I want to be part of that. And so show them the product. The sooner the better.
What are the big mistakes?
Don't talk about the team. If you skip it's like, oh, let me just tell you this, and this, and you never get to the team. Like, well, who are you? Whatever.
One of the things that I find is that when folks are pitching, they don't understand what their own core metrics are and how to explain that to a potential investor, right? So there's this formula I talk about a lot. Tell a potential investor what you're going to do in what time period, and then exceed on that deliverable in a sooner time period, and then rinse or repeat 2 or 3 times. And so do you find that the entrepreneurs sometimes have a hard time both identifying, what their key metrics for success of fundraising are, and then showing the fact that they've hit those metrics?
For sure. I mean, look, there are 2 ways that you can define metrics when you're pitching your business. And those are metrics, sometimes they're metrics of your business, or maybe it's the competition slide, where you lay out, here's how we differentiate. And one version is, here are the things that we're excelling at, and so we're going to only focus on those, whether or not they are meaningful drivers of our business. And the other is, here are our thoughtful estimates of the meaningful drivers of our business. Here are the thoughtful estimates of what are the meaningful differentiators in our market. And here is an honest assessment of how we've done. The first is terrible and no one cares, right? Mm-hmm. I am, DocStock, the only company that starts with a letter D. Great, check, but who cares? That's not a metric. So, but if you describe it, here's how it's differentiated, here are the things that matter, here's why I think they matter, and then here's how we're measuring them, and here's how they've progressed over time, then you get 2 things. One, you gain increasing confidence that the entrepreneur understands her business, cares about it, has a real sense of what will drive that quality and value. And then secondly, is tracking it, managing it, and ideally making some progress on those things.
Yeah.
Right?
All right, so I'm kind of curious to get your thoughts overall. I think in general, everywhere makes too big a deal about their home team, right? So LA companies are best because they're great. Bay Area companies are the best because they're Bay. New York. That said, I do think there are some general differences in the personalities What do you find to be the main differences between companies that are started down here in LA versus the Bay Area? And what are some of the things that Bay Area companies are doing really well that we could learn from down here?
Ultimately, this is all, you're asking me to stereotype all of you
Yes.
fine people. You're all a bunch of losers. No, I mean, I think they're great. Again, like I said, I funded this company, Gravity. Gravity is an extremely deep technical team, yeah. Right? They are extremely good technologists.
And they did a pretty major pivot, right, from their very first initial concept to what they're doing today.
They shifted. I mean, I think that that a lot of what they had built was really that became the core engine of this kind of interest graph and personalization and all. But you have to shift your business and focus on where's the money, where's the differentiation. But what's interesting is I think if you were to ask the average Silicon Valley investor, they'd say, well, the difference is that Silicon Valley is deeper in tech than is LA, right? And yet Gravity is as deep a technical company as any company I have invested in the Bay Area. On the other hand, I have gotten pitched a number of times by Southern California companies that are about, that are really about content or about promotion or about whatever. Like we have this particular celebrity or these particular opportunities to drive traffic because we have a lot of attention, and so we're going to build this engine or whatever. But we're going to empower the attention of this, content or celebrity or whatever. That is very different. You will almost never hear that pitch. Even when Zynga was pitching Zynga, which really was that, right? Which ultimately became is a content business. It was, this is a platform and it's a technology business and we can leverage the technology and all those things. So I think that to a certain degree it's really just description, how we describe those businesses. But I think that's the kind of broadest, completely unfair generalization I can make.
It feels like it's a strange time. As of 6 months ago, since at least we started DocStock in 2007, it was the frothiest market I've ever seen. I don't know if it's starting to change now. It feels a little bit like it's slowing down, but 6 months ago, I was seeing people raising the largest amounts of money at the highest valuations, insanely competitive deals. And it happened in this apex now where you have all these major companies in the tech space go public, and they didn't have good outcomes, right? Or not the expected good outcomes. Just talk about that. Like, where is this all headed in a year from now? I mean, I've been very publicly bearish about what's going to happen after the election. I kind of think the whole economy as a whole is propped up headed into the election, and whichever candidate wins either way. What is, in a year from now, do you think it's going to be the same, much easier, or much harder for all the folks in this room to raise money for their companies, and why?
Well, it's sort of the story of the haves and the have-nots, right?
Which is kind of the story of the United States right now.
Well, so maybe that's the case, right? But in this instance, there are a set of startups that will get a ton of attention, where there will be a lot of excitement, where the process will be very competitive, and prices will go through the roof, and they will get funded at very high prices. There is a very large number of companies that will not get funded, right? That it won't be about valuation. This is not a valuation question. This is okay, you didn't you did your Series A at an 8 million pre, great valuation at the time, but what progress have you made? Hard to see it. We're not going to fund you.
And so these B rounds are getting really hard
and
right
B
now.
rounds, so I'd say that there are a group of companies that are sort of saying, well, we better just make what we've got work, because if we run out of money, we'll never raise money. There are a set of companies that are either selling or going out of business because they have to. And then there's this small number of businesses that get a ton of attention. It's not that there aren't firms that have money, right? I mean, we hear these stories. There are a handful of firms that are raising larger and larger funds, so they have a ton of money. My own firm, we just closed a new fund. We have a $550 million fund that we just closed. So it's not like
were you part of that fundraising process?
Mm-hmm, yeah.
Did you feel that made you more empathetic to the entrepreneurs?
Totally. Oh my God, totally. I actually think it was really great, to tell you the truth. I've been pondering blogging this, but that would require me to, blog.
And you
I
had
should
the
get on
first
that.
venture blog, right?
I did the very
ventureblog.com.
very first venture capital blog, Venture Blog. That's how I got that. And then, but I've been remiss and haven't written enough
Where did
recently.
Fred Wilson come in with a VC, and where did some of the other guys come in?
Yeah, Fred and Brad Feld
Yeah.
came in relatively soon thereafter. I don't know if it was
Now
a
you
year,
got Mark
a
Schuster
year
down
later or
here
whatever.
in LA, it's a superstar.
Schuster
Both
making all
sides.
this noise.
He's on Tech Meme all the
Jeez,
time.
excuse me, He just funded Gravity, so I love him. All these upstarts. They just had like some VC cred list, and I wasn't even on it, and made me all sad this morning. My kids were depressed.
What's that? One of the things that I'm curious about is what's it like in the VC seat when you're so used to being pitched all the time and you're saying no, to then going in a situation where you have to chase these really competitive deals, right? It's like you're the hot D1 school, you're Kentucky, everyone wants to go there, and now you've got to go out and recruit the #1 high school player in the country. You've got to go out and raise money for yourself. Is that a humbling experience? What's that like overall, and what do you find when VCs go from being the person pursued to the pursuer or pursuee, whatever it is? What's that like? It seems strange sometimes. It seems like the venture capitalists that I've seen, when they have to go into the role of courting you, like they get uncomfortable, like they don't know what to do with it, and they've never had to sell. They're just used to people coming to them all the time.
They're bad at it. I'm fucking great at it. I can suck up all day and night. No, truthfully, I think that it has always been the case. Like, this is not some big turn of events.
Yeah.
When I joined venture business in 2000, it was a tough time. There were not a lot of deals getting done, and it was very tough to raise money. And so in that very short period of time, when I wanted to do a deal, there probably wasn't someone else wanting to do that deal, and I could just fund it, right? From, I'd say, 2004 until now and ongoing, it has been very rare where I have had a deal I wanted to do where there wasn't some other top-tier fund that wanted to fund it.
All right, so let's talk about that. What do you do? How do you outcompete that firm? What do you do to get the deal? Does it come down to the terms, or does it come down to the fact that you sell the entrepreneurs on working with you and the value you can provide?
For great entrepreneurs, it almost never comes to the terms, right? I mean, there's some range of terms that are basically indifferent, right? I had one instance where I gave a term sheet to a company. They had received 6 term sheets in a week and a half or something, and they said, David, we've got term sheets at kind of 1x, 2x, and 3x. You're kind of the 2x and whatever else. And basically what I said to them was, look, do you need me to be 3x? Because I don't know if I'm going to be there, but if you need me to be 2-point-something x, okay, fine, let's talk about it, right? So the terms are one of those things. And by the way, my terms, in terms of like preference and all that stuff, my view is when you invest early in a company, you put in money on very simple terms and everybody grabs an oar, and if you do well, everybody does well. No one has gotten rich in the venture business by making good terms, because if a company is Facebook, those terms, participating preferred didn't matter, right? So who cares? So it doesn't come down to that. When I have given someone a term sheet, the first thing I do that is part of the sales process, to tell you the truth, is to take your business seriously. So I actually do the work to get to know you and your team. I actually get to know your business. I spend time at your office. I spend time calling your high school teachers. I learn a lot about you, right? I had one instance where I did that all in a very short period of time. And I gave a term sheet to an entrepreneur, and over the weekend the entrepreneur said to me, David, I love you. I think this is a great term sheet, but my board doesn't think you're serious. They think that you got to this too quickly and you're not serious about this term sheet. And I said, don't confuse the amount of time it took me to get there for the amount of time I've spent getting to know your business. And he said, okay, well, that's an interesting point. I said, so let me tell you about your team. And I said, here's what I know, here's what I think, and here's what this one, the open question is he aggressive enough, and this one, and blah, 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 blah. And when I finished the conversation, he said, okay. I get it, so that's part of it. The other thing that I do in every instance is I give a list of the email addresses of every person I have ever backed. Founders, the current CEOs, everyone. I don't pick and choose. I give you, if there are people who've left the company, people are still in the company, I give you everyone and I say, reach out to any one of these people and ask them about me. And do it. Don't not do this. Do it for everyone you're considering because it matters.
How much value, realistically, do you think the venture capital firm adds at the board level to the company? Have you seen a VC firm help steer a company towards success, just away from disaster? I get this question from entrepreneurs all the time. And I think they have mixed expectations of what the venture capital firm will or won't do for them. And just interested to get your perspective on it.
Yeah, I was being pitched by a sort of famous entrepreneur, and he said, and at the end of it he said, so David, what will you do for us? And I said, what do you want? And he looked at me like, I just asked you a question, that's crazy. I asked you a question, don't ask me a question. But I meant it, like, well, what is it, what do you want?
Like going circular around.
What? I don't want that, I want you to want that. Clearly you did not put the poison in front of me. This is LA, okay. Anyone who's not laughing, shame on you. Shame on you. I think that venture capitalists can do all sorts of good things. But what they shouldn't do is come in to do things. Like that, you don't want a VC who's like, I can't wait to get to work with you. Like, let's get it. What's on your marketing schedule? Or whatever. Like, shut up. You were a lawyer. Like, I'm not telling you, like, sit down. I have a good marketing person. On the other hand, if there's a hole in your management team, I may know someone great. I had one company where I brought in this engineer who was a friend of mine who was fantastic, and he truly transformed that business.
So who are the kind of venture capitalists, because you've sat on enough boards that I'm sure you've worked with some other VCs that you're like, oh, that person is not the best for the company. What are the kind of things that you want to be, the entrepreneur should be aware of, be fearful of, or be thoughtful of, or be mindful of? Like, who don't you want as a venture capitalist on your board? Not specific names, unless you want to share.
Yeah,
absolutely. And then we're totally fine. We can't even turn off the camera
totally
for that.
Shouldn't
keep it rolling.
Take money from
but,
John,
yeah.
Whatever.
No, what's a bad venture, once the deal's closed, what's a bad venture capitalist?
Well, so here's a trait that I see all the time, and it makes me crazy. It is, you're sitting at a board meeting and you're talking about, and the company presents a set of metrics. Here's how I'm looking at my business, here's what I think, and they describe the set of metrics. And you discuss those metrics fine, and then the board member says, what about this? Are you tracking this? Are you tracking this other thing? And they say, well, no, we're not tracking it. We're tracking these other things. They say, you should track that. Report that next board meeting. Let's look at that. Really? Like, really? You think that's a good idea? Tell the CEO of the company what to track. If you think you need to tell the CEO of the company what to track, then you should fire her. You shouldn't tell her what to track. You should say, why aren't you tracking these things? And then if he says, oh, I don't track them because I'm an idiot, you go, oh, well, then you're fired. If they say, oh, I don't track them because that's not my business is X, Y, and Z, then you go, awesome. Sounds good to me.
Who are the CEOs that you know that do the best job of managing their boards, their investors, and talk about that? What do they do? What makes them exceptional at running a board meeting, at managing their board? Because that's a big deal.
Yeah, so the reality is that board meetings can be one of two things.
Who are the best folks to start? That's a good thing. You can say specifics on who does it well, right?
I'm so good
How does
at
Garrett
this.
do?
I'm like the man.
No.
Oh, you mean CEOs?
Yeah,
I thought we were talking about me.
Who are the best CEOs at
all of my
board?
CEOs are great.
You're willing to pick out your children of which one you think are the best, but you're not willing to say which one of your CEOs did the best job of managing the board?
Have you met my children? It's so obvious. Beckett, get on it.
No, really, who's like the best CEO?
There are lots of great CEOs. There are lots of different styles, right? I have CEOs who are really effective but dictatorial, like, here's what we will discuss, and this is what's going to happen, whatever. And when things are going well, that's great, right? Yeah. It's less great when things go the wrong way, and you're like, well, can we talk about this thing? We should talk about this thing, right? So there are CEOs who think that the board meeting is to get you up to speed, and it is not, right? It is not about reviewing all of what happened in the last month. Oh, here's the metrics, and here's what we did in marketing, here's what we did in sales, whatever. And that is, by the way, the vast majority of board meetings. And they are not, they're great, okay, great, now I understand your business, but they're not in any way useful to you as an entrepreneur. The most effective board meetings are the ones where you say, oh my God, these are the things that I need to figure out, right?
Yeah.
We need to be financed by Q1 of 2013. My customer acquisition cost is too high, and I think that it's all about channel, but let's talk about that.
You know, Brad Feld told me the best board meetings ever go to is Mark Pincus, and they send out the board packet, in advance, everybody looks it over. And they start off the board meeting, and Pincus just writes 3 things down on a whiteboard or on a PowerPoint, says, this is what we're going to talk about, and that's it.
Yeah.
And the entire 3-hour meeting is just a discussion. He's like, it's by far the absolute best meetings I ever go to.
Totally. That's how you should run a board meeting. It should not be hey, check out the new logo. Which one do you like?
So other than that, what are the other mistakes? So someone's going to raise money. They're going to be in their first meeting with their venture capitalists. What are the mistakes people make in running those board meetings beyond what you've talked about right here?
So is it pitching or board meeting?
Board meeting, yeah. And managing the board, what are the big mistakes people make?
Well, I think you have to understand, like, VCs can be helpful. You just have to ask them to do things. Like, you should ask them to do it, and then you should write it down, and then you should send them an email. Because even if we say, like, oh, I'll totally get on that, and then you get in the car, and then you get a phone call, and then whatever, and you will do it if you remember. But if you get that email from an entrepreneur, and you say, hey, listen, David, you mentioned that you could introduce me to so-and-so, or you mentioned that you knew blah, blah, blah. Can you do that? I instantly go, yeah, of course. Like I said, I'd do that, right? So I think that's important. The other thing that I think VCs should be really good at, you should not take an investor who you don't think can do a good job of helping you bring people into the business. Either convince people to fund the business, bring executives into the business, because look, it's very powerful when you're trying to hire an entrepreneur to say, well, why don't you talk to David? He just invested $12 million in the company, right? Because I can say, hey, listen, in any given year, and this is true, in any given year, I probably receive 1,000 business plans, and I fund 2. And this was one of them. So why is that? Why did I take 1,000 down to this one? What was it about it? If I can't articulate that, I'm an idiot. But if I can articulate it, it's incredibly powerful when you're trying to recruit someone into a business. Right. And so you should absolutely call upon your venture investors to do that.
So I think you very deftly, by the way, Counselor, slipped away from my last question. You said right now there's haves and have-nots, but a year from now, is it going to be harder to fundraise, the same, or
I think it's going to be the same. I think it's going to be the same. I think that...
So you don't see on the 12 to 18-month horizon anything from a macro standpoint changing? Like, we're not going back to October of 2008.
But it won't. Here's why it won't change anything, right? The reason it won't change anything is the same reason that Facebook got up in the private markets to $100 billion. It had nothing to do with the fact that Facebook was worth $100 billion. It had everything to do with supply. It was supply and demand. People wanted the Facebook, and there wasn't that much of it. And so, what's the price? Oh, it's $92 million. I'm in. Well, it's actually $94 million. I'm in, In venture, there are a small number of companies that people get excited about for whatever reason, and it may be rational, it may not, right? It isn't necessarily the indicator of the dead-on indicator of which are going to be successful companies.
But it's also the same thing right now. It's not just companies. I mean, firms like August Capital are going out and raising their 4th, 5th round at $500 million, but there's a lot of venture capital firms that aren't. I mean, there are probably 3 main venture capital firms in Southern California now, right? There's Rustic Canyon, there's GRP, and then there's a lot of other. There's Crosscut, which is doing smaller deals, but it's not like that. There's 10 large venture capital firms here in Southern California.
The pool of capital is contracting. The number of interesting deals is remaining consistent, and so again, you got this frenzy of we want to fund these companies. It's almost always the same firms competing. Maybe it's 2 of them, maybe it's 4 of them, whatever. And so all of that is sufficient to create a market. And the market is sort of constrained. It's, it seems quite inflated, but it's a constrained market. It can't be trillions, and it's not zero. So I don't think that it's going to change monumentally. Even if the economy starts getting hard, getting challenging, I still think that people will go, well, the economy's going to come, if they're smart, right? The best companies are often the ones funded in the down economy because when the economy comes back, they've got like a business. So I think we're in for this continued challenging time for a lot of companies and a few that are doing great.
Well, the interesting thing in LA is in the last year, we now have probably 5 or 6 accelerators that didn't exist before, right? Mark Suster done this for a while, but Launchpad's more formalized now. You have Science, you have Mucker Labs, you have, all these different ones like that are coming out of nowhere. Not coming out of nowhere, but 5 or 6 main accelerators, and just from those, there's going to be a class of 60 to 100 companies coming out of LA a year that are all looking for funding.
Yep.
Are you starting to see those companies start to pitch your firm and other Bay Area firms a lot?
Hopefully. I haven't. Yes, I'm seeing some of them. Look, I haven't yet given the most important piece of advice I can give all of you fundraising, and so I will now give it, which is the single most important thing is who introduces you to me. It is how do you get to me. It is all about having someone with a lot of credibility introduce you as someone with a lot of credibility. Unless you're someone I know, right? You can pitch me anytime, and that's great. We know each other, and I'm happy to do it. And I think you could use some capital, for example. But otherwise, find someone, right?
Aren't you, by the way, in Rocket Lawyer?
Yeah,
Okay.
And we're doing great. So that's all good.
By the way, you realize like 350 people are now going to email me like, hey, can I get an email introduction
Well, but
today
that's the right
morning?
answer. But that's exactly what you should do. Like, as annoying as that is, but way more importantly, if you don't know them, it's not doing them any more good than if they just emailed me directly. But if you email me and say, hey, you should meet these guys because they're doing something really interesting, and I've known them for X period of time or whatever else.
Yeah. And I do about
That's amazing.
I do about 5 of those intros a week, right, to various VCs. I'm like, hey, I think these people will work well with these folks. Yeah.
And every one of my deals came from someone, right? Came from a reference or or someone I knew.
Let's stay focused on this. This is like the best advice, David Hornick. This is the tweetable stuff.
This is it.
This is the
I'm telling
David
you, people.
Hornick. All right, 1, get introduced to me through a warm intro, someone I know. What else?
That's everything.
That's everything.
No, I mean, but seriously, no, I can't even tell you. Like and it's a very simple calculus. It is the closer my relationship with the person who's introducing you to me, and the closer your relationship with that person who's introducing you to me, the better the introduction.
So, like if one of your children introduce you to one of their children friends from the playground, it's guaranteed meeting that's going to happen.
I got to tell you, we have funded a company that was introduced to us by the kid of one of our partners. Have fun. Yeah, right, exactly.
Exactly.
Go track down Beckett.
But that's
he's 10, but he's smart. Smart as a whip.
That's how to get the venture capitalist to meet with you, right? So
yes.
That's your best advice on how to get the venture capitalist to meet with you. All right. Now let's walk through this step by step. No, really, we're gonna break down the best advice on how to get funded. You want to meet a venture capitalist.
That's step one.
Right, step 1.
Have a great executive summary.
Now they're on the phone with you, right?
Well, first you got to have an executive summary, right?
What
I will
makes for a great executive summary?
I will almost never get on the phone with someone just because someone says get on the phone with them.
Great. All right.
I'll say, great. What
Now
are
send
you
over.
doing, right?
So what's
a great executive summary? A great executive summary is just a teaser. It's like a trailer. Trailers are awesome because they get you excited. They give you one good, laugh line or whatever. And you go, I got to get more of that. That's all you need in the executive summary is. And if it's that your team is amazing, and then just do this is an amazing team. We're building this little thing.
When you say executive summary, it could be like a one-page. It could be just in an email. It could be like a
absolutely.
one-slide PowerPoint
You
deck.
just have to describe your business enough that I think to myself, I want to know more about that. The fundraising process is very simple. In every instance, all you need to do is get me to want to know more than you just told me, right? You get an introduction, I go, I want to know who you are.
That's really, but this is like super important because this is, I think, I've tried to coach so many entrepreneurs. Can you repeat that again and then just explain it?
In every instance, it is not, you don't have to convince me in any given conversation to give you a term sheet. That's so far down the path that it doesn't even matter. All you have to do is convince me that I want to have another conversation with you. You know, it's like dating. I mean, you know, I didn't necessarily want to marry my wife after our first date, but I sure wanted to go out again. I was like, we should try that again, you know? And then after a number of dates, then I got engaged. And it's the same thing here. Like, you send me an email, hey, you got to meet my friend Susie, she's cute. I go, oh, send me an executive summary. And they go, Susie went to Swarthmore and she's really into Democratic politics and she loves the Decemberists. And I go, sweet, let's meet. And then I said, and then in Ventureland I say, I've copied my assistant Mary Kroll. Mary will find a time that's convenient for us to get together. And then we sit down for an hour in a conference room. Now you've got a PowerPoint. This is like
so
the
now,
PowerPoint.
Now you got the first in-person meeting.
This is it.
You got a deck. They're presenting to you one-on-one.
Yeah. You're going to sit down with me and you're going to do it. Now, you got to make it count. And you got to make it count from the beginning, because if 10 minutes in, I'm thinking, I wonder if I should pick up my laundry or I should whatever, then it's like a date, right?
How do you make it count?
Well, you have to start with the thing that, so first of all,
start with the sizzle?
Start with the stuff that's exciting, right? You know, don't have this sense of like, if you're a great storyteller, then by all means build to this awesome climax, more power to you. But frankly, most people can't you kind of lose it in the beginning. It's like, and then, we walk through the forest, and like, whatever. Wait, I'm getting to the ogre, and you're like, I don't give a shit about the ogre, Whereas if you start and you go, so there's this ogre, I'm like, great, where, So I think you have to you have to start with, I have a massive market that is totally broken. If you say to me, there is a massive market that is totally broken and no one's addressing it, I am with you. Like, you have got me. You had me at massive market, And then the only question is, can you deliver the goods? Like, so fine, there's this massive market broken. What's the market? Why is it broken? Is it really massive? And why is there white space? Like, why is there white space? You may not even need to build it, right? Like the Splunk guys I funded on a massive market that was broken, and they hadn't written a single line of code. I've done that on multiple occasions, because if it's a great enough story, I go, I'm in. Like, I want to be in.
So key piece of advice when you're in the meeting, like, start with the sizzle, start with the most important thing, and then deliver on the goods afterwards.
Ideally, the most important thing is your team. Like, in the best of all possible worlds, the first thing you start with is, this is a great team. Here's how we got to know each other. Here's how we've come together. Here's why we are focused on this problem. Here's why we're the right people to do it. Like, ideally, that would be the first thing that gets me. The goal at the end of that hour-long conversation is not to get me to fund you, because rational human beings should not fund you on an hour-long meeting. I should not say, here's $6 million and let's work together for a decade after an hour. Like, that's just a dumb idea, But this is my kind of new measure, which is, after I see a company, if I'm more excited about the company at the end of the conversation than I was going into it, you're on to something. When I go to bed that night, whatever time that is, if I am thinking about your business, now you're on to something. Now we're on to something pretty interesting. And if I wake up thinking about your business, then you may well get funded, right?
So the goal is each step along the way, just make you want to take that next step. Eventually you're going to be doing your diligence. You'll bring somebody in for a full partners meeting. All the partners collectively decide, hey, take it a step further. And it just naturally gets to the place that's like, all right, I want to do this deal.
Yeah, I like what you're doing. I like the team. I've spent a bunch of time with you. I'll tell you, here's the perfect tell. When you're out fundraising, I'm going to tell you when you know you have won. For the first meeting, the VCs will say, so what are you doing? How are you doing it? What do you think of this? The second meeting, well, how is your this? How is your VP of marketing? At some point, some VC will slip and they will say, so if we were to do blah, you have won. You just need them to say we, and you have won. It is very hard. It is like capturing, you have captured them.
It's like herding cats.
But once I am talking about your business like we, then it means I want to be a part of that, and the way I get to be a part of it isn't to join your team, it's to give you a bunch of money.
Got it.
Hey, here's money.
So let's get the microphones ready, because we're about to go to questions in just a second. We got the two we got the mics around? Cool, we're going to get them. By the way, you can hang out there. By the way, we're constantly hiring at DocStock. There's a couple open recs right now. Right now we're hiring for a sales role. We're hiring for marketing roles. Todd's one of our director of marketing over there. If you're interested in a sales position at DocStock, if you're interested in a marketing role, if you're an engineer, we're constantly hiring engineers. There's 40 of us in an office just about 3 blocks away from here. Head over to Todd over here. There'll be other DocStockers at the table, chatting it up afterwards. We'd love to have the opportunity to work with you guys at DocStock on a daily basis. All right, so why don't we go to questions? I think we've got time for about 3 or 4 of these. If we could get 2 people, Gabby, if you could be helping out with the other mic. So why don't we go over here, stand up, say your name, your business, ask your question. And as always, if it's a stupid question, I reserve the right to make fun of you.
But I would never do that.
No. I'm Jay Mutsafi. I'm technical advisor at schoolmenu.com. And what you were saying about, thank you for coming and speaking here, by the way. What you were saying about the best way to get to you is have someone introduce is what I've heard since we've started. But what does everybody do that doesn't know anybody that knows you or any other venture capitalist? What do you do when you're just starting out and you don't know these people?
Yeah, it's hard, right? It sucks. Imagine you transplant your family to a new town and the kids show up at middle school and they're like, I don't know anyone. And well, what do I always say to them? Tough crap. Go meet someone. Like, this is, this is your school. Get on with it. It's not my problem. And that's the reality. The reality is, of course, it's hard. And this, you are now surrounded by a bunch of people who care about company building. Someone in here may be just the right person, right? Earlier today, I was hanging out with a friend from LA. Another friend who I know, who I used to represent, shows up, sits down. The two of them start chatting, and it looks like now that guy is going to help the other one raise money, right? They didn't know each other, but they knew me, and they had a conversation, and the guy was excited about the business, and so it is hard. I don't pretend for a second like this is easy and you just go do it, but but you just have to get out there. And truthfully, for your business, you have to anyway. You have to find other engineers. You have to find great marketing people. You have to figure out how to sell your business. You have to do all those things. One of the easiest ways to do that, by the way, is that there are service providers who are great connectors, right? Great attorneys. The folks at TriNet are fantastic connectors. They know everyone. I mean, PwC, they know everyone. So you may end up go pitch your business to to someone who wants to represent you, and if they love you and get to know you and as a person, they can be that introduction. My introduction to Splunk was from the attorney that I knew through another investment I'd made. I'm incredibly grateful to him. He introduces me to a company, I will take that meeting, trust me.
One of the things I often hear from VCs too is, if the entrepreneur, and it's not helping you with the how, but if the entrepreneur isn't resourceful enough to find somebody I know to vouch for them to get the intro, then they're not going to be resourceful enough to build a team, figure out how to get to market. So they see that as the first kind of trial by fire to get over. Let's take another question. Do anyone? We'll try to get some diversity in the side of the rooms. Just raise your hand if you have a question. We'll come by with a mic. Over here. And then, Gabby, can we get a second mic going? So we'll do this a little bit more quickly.
Hi, my name is Bei Yang. I'm currently working for a very large company. It's Walt Disney. Being a very litigious company, obviously I'm very concerned about a lawyer doing my own startup. When is the proper time to have a lawyer, and what should we be looking for in a lawyer?
Lawyers are great. They will be great partners to you. Now this, working for a litigious place and whatever else, I mean, if we're talking about litigation, the answer is never. The very worst thing that can happen to a startup, period, is that it gets involved in litigation in any form. Doesn't matter how right you are, litigation is wildly expensive. And so I got pitched on lots of businesses where people would say, I can assure you this is legal, and I have a white paper that says so, and so you should be totally fine with it. And I'd say, yeah, but don't you think you'll be sued? And they'd say, well, yes, we probably will, but even if we are, blah, blah, blah. And I'd say, it's not fundable. You better be doing something so monumentally important that it's worth being sued for. So So from a litigation standpoint, I think you have to all be really careful that if there are things that might get you into a situation where you're being sued from someone bigger than you, it is bad. With respect to attorneys, when can you get an attorney to represent you to build your business? The answer is, if you can find a great attorney who's willing to do it at the very beginning, there is no better thing to happen than to make sure that you have all of the infrastructure in place to build a company that has thought about all of the things you should be thinking about, has incorporated you in an appropriate way, that has the right stock ownership, that has the right IP protection, where if you're leaving a place where there's potential for conflict, that you have done all the things you should have done around those things. Now, depending on the firm, that could be very expensive, and so you have to understand that there are some firms that are very startup friendly, and they understand that, and they will not create a massive cost to you, and in many instances, in fact, they'll defer that cost until you raise money. But if you can find a great startup firm that is excited about what you're doing and is willing to defer those costs to the future and be cost conscious, having someone who has been through this before is invaluable.
Let's grab another couple questions. We got one over here. Great, thanks.
Name's Jeff Carmody. What is the right and, more importantly, the wrong structure for someone to raise seed round of capital before they get to you?
Wow, you're getting a lot of lawyer technical questions. I mean,
let me tell you, the term sheet should include the clause blah blah blah. I've written a blog post about this in my brief moments of writing on Venture Blog. I think it's called "Don't Take a Capped Convertible Note Ever," or something like that. So you're getting a sense of what it's about. It just depends, right? I mean, there are lots of different decisions that go into how you're going to raise money and from whom you're going to raise it and how much you're going to raise. There are lots of instances in which an entrepreneur might say, gee, I'd rather have an uncapped convertible note, and that's the best thing for my business because it'll be the least dilutive. There are other instances in which you could say, look, I've got a great partner who's willing to work with me, but it's going to be a priced round at a particular valuation, and let's just get on with it and work with a great partner. I happen to believe that is the answer, that the best answer is find the people you want to work with, come to an agreement about what's an appropriate price given the risk at the moment, price the round, take their investment, and get them to help you build the business to make it more successful.
let's go on to some other questions. My recommendation is use this as an opportunity not to ask David a question that you could research on the internet, but probably his perspective or opinion on kind of something interesting. All right, over here.
David, thank you again for the discussion. It was interesting. So to get your interest in
What was your name?
I'm sorry?
What's your name?
Paul, thank you. To get your interest in a meeting, at the first meeting, if I started telling you that the business was launched as a result of a loaded gun in a paper bag, would you want to know more?
This reminds me of my friend Brad, who went down to the Berkshire Hathaway annual meeting, and he said, and he stood in line or whatever, and then the question was like, what, yes, you. If you were a young entrepreneur starting a vacation club that was called blah, and were trying to get the attention of many wealthy individuals, what would you recommend? And Warren Buffett's like, all right, you did it, move on. You're like, we get it.
Well, here's my main advice. If you're going to use the opportunity to pitch David on your idea, you should at least say your name and name of business so he remembers you. So kudos for the cojones, but maybe think through to say your name and name of business.
So I have a hard time envisioning what the tech business is, like the business that turns on technology that starts with a gun in a bag. I'm pretty sure I wouldn't invest in any gun company. It's unlikely I'd invest in any bag company.
But a gun in a bag would make it. Next question.
So yes, I'm intrigued.
Let's keep going. By the way, so let's help Paul. What is the name of your company?
Gun in bag.
Orc Alert. All right,
thank
there.
you.
I just helped you. 10%. I want it if you raise money. The next question over here. Can you stand up?
Sure, no problem. So my name is Josh. Actually, I know your brother.
Oh yeah.
Yeah. Quick question for you. A lot of the VC focus, I think, is on obviously an equity exit. Have you ever seen things that have sort of a non-traditional exit, if you will, either like a cash flow model or something that it goes into some sort of basically like a limited partnership type structure? Would you even look at that, or is that sort of something? I mean, not you personally, but would a VC look at that?
So there's a really great example of that. And it's a company called Friend Finder Network, which ran Adult Friend Finder. And it turns out that Adult Friend Finder couldn't raise capital from any venture. There was lots of interest in venture investment in Adult Friend Finder. The only problem was it was, porn. And so, so the founder kind of couldn't raise money, but on the other hand, eventually he got kind of $100 million a year in cash flow, so he didn't care that much, right? Now, I'm not saying that you're likely to get that business, but that's a great business. It doesn't need venture investment. It doesn't need anything. And if you're the owner, you could just get rich by making money.
You know what else? You know the way you could do that?
That's
guns.
Guns in a
and
bag.
bags.
Guns in a bag.
Guns in a bag.
That's right. That's
Let's
pretty
take
good.
one more question. I hope it's a good one. If it sounds dumb, I'm just going to say pass, and we're going to go on to the next one. Let's go, Gabby,
Scream it
Laurel. Let's make the last
it
one
count.
count over here. Guy, if you're in the front row, all right, we got one over here.
All right, bring it on.
Thanks a lot,
No.
David.
All right, sorry. I was premature. I have to get to the airport. No.
All right, thanks for your talk today. I really appreciate it. My name is Sieva. My question is, I'm going to assume something, that you have some kind of dating profile that you're looking for of that perfect company. What are the top 3 things that you're looking for when someone walks in the door and says this is the area they're in, or what's your breakdown?
Yeah, it's really hard to say. And so there isn't a profile. Essentially what happens, as one of my partners puts it, it's a giant lookup table. So my partner Dave has been in the business for 30 some odd years. My partner John has been in the business for 25 or 30 years. I mean, I've been in the business for a dozen years. You have, if you imagine the path from 1,000 plans to 100 meetings to 20 getting serious to funding 2, you've a huge number of data points over a decade. And so what we look for is, oh man, that reminds me of what was so successful here, right? In fact, I funded a company as a direct result of this. Dick Costello and his team from FeedBurner came in. I spent a bunch of time with them, and I was too big of a wimp, and I didn't fund him. But I loved Dick Costello, and I loved the team. I thought they were really energetic and smart and great. But I didn't fund them. They moved on or whatever. Then a new young team came in, and I loved them. I thought they totally reminded me of Dick and his team, and I funded them. And I called up Dick, and I said, hey, it's funny. I just saw this great team, and I'm funding them because they remind me of you. And he's like, what is that? How's that good for me? Thanks for nothing, numbskull, So there are 1,000 different things that come into it. So I've sort of talked about it. Really great salespeople who are genuine and care about their business and can describe it in interesting ways. It's all about the Q&A. It's all about them describing their business in a successful way and describing a big, interesting opportunity and being passionate. I am not a person who funds someone because they think it'll make a lot of money. Yeah, that's great. But you know what? It probably won't, so let's not make that the focus. Let's make the focus that you actually give a crap, that you love what you're doing, and you can't think of anything else you'd rather do. If you can think of something else you'd rather do, I should not be funding you.
All right, so on that note, couple things. One, I want to thank the sponsors, as always, for helping us out. TriNet, Moxie Communications, Cybercoders. If you are interested, again, in working at DocStock, we'd love to chat with you. Come talk to Todd over there. We'll have a couple other members of the DocStock team come over. Please take a moment and tweet out, check out the new at DocStock business video courses. You do that, I think we can find a couple extra than 20 to give a giveaway to the conference over here. Oh, yes, thank you very much. We would love if you use DocStock to get a couple of you for testimonial. I think we got a couple drink tickets as bribes. So Dave in the back there, Nick, are going to be checking in with a couple of you. If any of you use DocStock and are willing to get on camera with your beautiful faces and melodic voices and talk to us about loving DocStock, we would love you in return for that. But most importantly, to David, who flew down here, shared some amazing advice, your candor, your humor, your general menschiness. Thank you so much, man. You're awesome. And the only last thing that I'll ask is let's please be respectful of Dave, that he's got to catch a flight. You can stalk him on the way out, but let's at least let him get to the door.
I really am sorry that I have to sprint. It's like the stupidest thing ever.
Again, what's your email?
Hornick at augustcap.com. I'll actually leave some cards over here, but feel free.
Sounds
Hornick,
good. And November 13th, it's on the card, November 11th, November 13th, last Startups Uncensored of the year. We'd love to see all of you here. Kara Swisher, thank you everybody for coming out. You can get the music back up.